Tech stocks have recently crushed the S&P 500. While clearly the S&P is rocking, the Nasdaq has soared past everyone's expectations. Here's where I think investors are missing out. I don't think they're understanding the generational AI space. We're looking at this on a performance basis, and we're going to get into why this could continue for some time based upon the fundamental shifts that we're seeing in the market, and why looking at this versus looking at it relative is really where it's at. The devil's in the details. Today, we're going to break down which sectors they're flaying and which sectors are absolutely breaking out based upon fundamental changes. Investors are scared looking at some of these names breaking out at all-time highs, but what's driving new revenue streams from autonomous systems can't be ignored. With names like Coin breaking out to all-time highs, investors are obviously skittish and a little scared. I think it's important to understand why these names are doing what they're doing. Today, I'm going to show you specific metrics that prove that this trend does have staying power. More importantly, what stocks you should exactly be looking at to ride this next wave. Let's get into it. Hey everybody, welcome back. As always, subscribe to the channel, click all notifications. It's really important, especially lately, because there's a lot of things that are changing, and if you want to stay on top of them, you want to follow along. In regard to the S&P and what we're seeing here, you're seeing a breakout. It's very clear, 1, 2, 3, and a flag. I think what people are missing is the devil's in the details, and if we take a look here on the Qs, why this could continue and why you could see outperformance here. We're actually breaking out of our 3-bar pattern right into this area. And I think the best thing we can do, because we've got a lot to cover in a short time to do it, is to jump right into it. If you are trying to get into the community and you are already on the wait list, please check your email, because there's a really good chance that you've gotten an email and there's only a few days left to get in before the community closes again and enrollment closes for a period of time. If you're trying to get on the wait list, links are in description, and sometimes I actually pin them in the comments. That's it. Let's do it. One of the things I use a lot is relative performance, and the reason for that is because it works. When you start looking at things relative to another thing, you can start actually seeing where the money is going. In other words, is the Nasdaq in this situation outperforming the SPY? And if we look at this with candlesticks, you can get a good sense of it, but I do like to just kind of look at the line and just put a line in here. I'm going to clean all this off for a second, and you'll be able to see this pretty clear. What we're going to see is just a straight up, very back retest of certain areas, and then from that area, we're going to be able to tell how we're acting when we get to it. And then after we get to it, what do they do? In other words, when we get to this area, what tends to happen and how long does it tend to stay there? And then where do we go from there? So every time that we've been hopping over this area from the 21st, we tend to lift up, come back down and retest this area. And that gives us an area of about January to April up. This one obviously went a little higher, and it basically we're measuring the relative performance. And then from there, came down to August, and then that one took from July to August. You just see this one I really wouldn't count. I want to get over that level and then go from there. We have the fake test, and then we have the real test from the Feb level when we got liberated all the way down to April where the liberation stopped, and now we're back up here. So there's a couple things that I think we have to really think about here. Are we going to go through something like this period that we've seen before where we get this couple month pullback to this key level, which has really, it's held the test of time. Now, when I use the Qs in the SPY, it only gives me back to about 25 years. So if we just take a look at this peak back, and everyone always will say, oh, well, this is where the imbalance happens and this is why you got to get out. And I'll show you why they're wrong and they shouldn't say that. But what are we really seeing here? So I don't have any impetus, and this is really what you're always looking for too. Do you have a catalyst? In other words, whenever we look at this stuff, we have to go to ourselves, do we have some kind of catalyst that could get us down there? Valuation to me, it's not a catalyst. So you're seeing a lot of people sell NVIDIA or saying, oh, NVIDIA is overvalued. Okay. You're seeing it with Netflix this week, it's overvalued. Yeah, it is. I mean, by any standard, it's pretty high up there in the charts. But what you always have to look for is that what, whenever we look at the stool, right? We have the what, and then we have the who. We have the who. Bear with me, I'm getting through my second cup of coffee. And then we have the when. So we have the what, which is the macro, and then we have the who is affected by that, and then when do we act as a buy or sell, right? And then, as always, this is our stool. And then we sit on top of that stool, and sometimes we're leaning on the front, and we're leaning on the bar, and sometimes we're leaning on our back legs after eating, a mozzarella stick or whatever you crazy kids are eating these days. So what does this mean for us? Well, I could say that, yeah, when we get here or in this area, we tend to pull back. Who's going to be affected by that? Well, maybe it'll be semiconductors. Well, they just crushed earnings. Maybe it'd be software. Well, a lot of inflows are going into software. Maybe it'd be biotech. Well, biotech's actually lifting right now. So when we start looking at the who, I don't have it. So then I have to kind of look at the what and say, well, what's really going to derail this? I don't have an answer to it yet. Is it tariffs? Is it double secret tariffs that we don't know about that are coming out yet? You don't know. And we're going to get into the whole inflation thing here in a second and show you why inflation's not really an issue, but I'm going to do it through charts. Because if it was, they'd be hedging differently. I'll show you in a couple minutes here. But so I look at this and go, okay, well, that's not the case. So I have to go back and say, yes, historically, when we get to this level, or actually, let's just drop it here where the pin is, because really it's coming back down to here. But anytime we get over this, we tend to pull back. And I'm going to show you in a couple graphs why I don't know that that's what's going to happen here, but I think you need to be cognizant of it. Did we really have an event here in 24 to April? Not really, no. We had a rally, and back here it was in October. And remember, this is relative, so it's not going to match exactly with what happened in the market. For example, if I drop the S&P below here, you'll note that obviously the S&P is going to do its own thing where, oh, this was a great time to get involved in the market right down in here because that was the bottom, and that made this relative performance look awful. What we're trying to assess here is not what the S&P is doing. We're trying to assess, is the NASDAQ going to continue to outperform the S&P? Because that's really what you want. If you're looking for growth and you want to buy growth names, you need the NASDAQ to outperform. And what we can see is, yeah, I mean, sure, when it's this overdone, yeah, we might be able to use this and say, well, we might be bottoming. But for in here, what's it really telling us? Not a whole heck of a lot, because I mean, if we really look again at the relative performance, we've been here before, and obviously the S&P was a lot lower. We've been here, and we can see that the relative performance, even on hitting new highs, was less. So understand what this is truly telling us, and I think that's very important for us to remember. How would I look at this going forward? I would suggest that you need to break out of this. I would suggest that when you really look at this, you need to kind of get above this. Let's drop this down. And this is what happens when you do them raw and unedited, which I would rather do them raw and unedited because I find that we just get into it. It gets a little more real. I just do. So I'm going to keep doing them this way. But you can see your level right here. And the question is, does that relative performance finally break out of this area? Is that something that really happens? And was this just basing for a while? Because really what you have here, and we could make the argument that you've just really had a relative performance that's relatively flat up, S&P performs, NASDAQ performs for a period of time. That's not really what you want. And this is going to get kind of, I'm not going to say weird because it's not, but like it's going to get kind of into it where you start looking at this going, this is not doing anything like what happens when the market tops. Nothing. When a market tops, and I'll just drop your line right here, you have your what and you have your who, and then you have your when. So this is back when Itchy was saying, oh, you know what, this whole thing where we were given, $1.7 trillion, that might have been a bad idea. Maybe we're going to have to raise rates. Oh, we're going to raise rates more than any time in history, and we're going to do it as fast as possible and not see what the chances of any kind of disturbance are. And then we're just going to, go from there. And that's why, there was literally trillions of dollars erased and made, and people thought they were smart buying NFTs, but, and we'll do that in a full video. But when we see this, we have to understand what we're looking at. And I think that too many people spend a little time looking at one chart instead of a lot of time looking at one chart. Like they try to go through all these different charts at once without even understanding what they're really looking at. So what you're seeing here is free money, cutting rates, and what happens. So this would be an ease of financial conditions. This would be a tightening of financial conditions, an ease of financial conditions down here and a tightening of financial conditions up here. And what are you having here? Are you having an ease of financial conditions or a tightening of financial conditions? So when we go and take a look at this, one could actually argue that back here in 18, 19, 20, before this broke out, is very similar to what's happening now. And I don't know that you have to look at this and think that you can't break out of this, because I really don't have a catalyst that's going to take us back. And quite frankly, I think that this can go a lot higher than people think it can. I just want to put this in perspective. If we went and took a look at this whole area that's been multiple years, and we look at this break, and we look at where we're at, because people always compare this to .com, and you have to look at the actual relative number on a percentage basis. You can't look at where it was and look at there, because there's a huge difference there. But you're at 39% from this break during the pandemic. If we go back and take a look at this from a .com perspective, and you kind of see your break right here. And we took something like this. Where does that really put us? You were at a 95 outperformance. This was absolutely crazy when people refer to this or anything that they've seen in the past years, even the pandemic, as the NASDAQ. You know, it was funny back then, back in the day, you actually had people, that one sounded a little forced, but back in the day, you actually had people that were value managers that were just quitting. Because you had stocks that were trading at like 4 times earnings and nobody wanted them. No one. People were just taking these companies private. It was crazy. Nobody wanted to own Berkshire. You had some of the biggest fund managers in the world actually quitting that were value guys because they couldn't figure it out. And quite frankly, they just should have hung around for a couple of years. But you're nowhere on a performance basis, and we'll get into it. And a lot of people will look at these charts and think like, okay, well, how do I make money off of this? And this is the really important part. This is telling you who you should be looking at. That's the easiest way to say it. I can always look at XLK in relation to SPY. I can throw in the RSI, kind of get a sense of it. Great. But when you're looking at is tech outperforming in the S&P, and this is what you see, and I didn't mean to make it rhyme, but when you see this kind of thing, you're not outperforming. You might be outperforming since we all got liberated, but you're not really outperforming from where you were in January 2024. You can't even get back to that area. So how much of the performance of tech and the SPY relative to the SPY is really working? And you'll see what I mean by this. If I go and take a look at something like XLI divided by the SPY, you're going to get a different sense of what's happening here, right? And you look at this and go, oh, well, industrials haven't even begun their rally versus the SPY. Go take a look at XLC versus the SPY, and you'll see what I'm talking about here, right? You're not really lifting over there. So you kind of have to get a sense of this and go, well, what's really doing it? And what's really getting this thing to move, which is fascinating to me, it's just rotation. That above everything else, when I start clicking through all of these, it's simply just rotation. And that rotation is so healthy. Look at this in regards to XHB and the relative performance that you had a year ago versus where you are. What they're doing is they're rotating, and that rotation over and over again is just keeping the SPY just chugging along with will it, won't it? And yeah, there's some movement here. Sure, take a look at IGV versus SPY before we get into it, because this would be extended software tech. But all you're doing here is rotating over and over again. So what we have to do is look at those rotations and then see if there's something to it. And I think there is. What we want is we need a clean breakout and a clean run. You don't have it. So this idea that you're in this scenario where everything's rallying and everything's ahead of us and we got to be careful. I'm always careful and I'm always early, and I don't mind it. I truly don't, because you can always get back in and do the last leg of trades and do those as shorter term trades. I learned a long time ago that it works for me, and you should do what you're comfortable with, but I would rather be out and turn them into shorter term trades than trying to squeak out that 7th or 8th inning. And that usually means that sometimes I'll miss like those end parabolic moves, but I'm also not coming in to, down 10% in a day. If we look at this, just how I trade, everyone trades differently. You should do what you're comfortable with. XLK divided by the SPY, and you can see how we're sitting right in this area. And that's pretty significant, don't you think? That's definitely something that we should be paying attention to, I think. And what I'm getting at here is, are you breaking out? No. Are you overextended on a relative basis? No. Look at this on a weekly and you'll see what I'm going at here. And everyone will say, oh, well, we're back to these levels. You can look at this on a relative basis. And I do look on a relative basis just to say, but to think that this should stop because this is here is stupid. And I don't know another word because I'm not the smartest bulb in the world. So I'm just going to call it stupid because that's what it is. Here you had Cisco trading 80 times earnings. I had Intel trading 80 times earnings. You had the trifecta in here in the 90s, back in the day. Again, sounded a little too forced. What you want to focus on is what moved back here. And people are like, well, why do I care what moved back here? Because it's the same soup reheated. In other words, what started to lift in here was 3 trades. It was Intel, Dell, and Microsoft. You needed the operating system. You needed the software, right? Your operating system. You needed the chip to make the operating system work, and you needed the hardware. And everybody bought Dell. Nobody wanted Gateway. Nobody wanted that stupid CalBox coming to their house. So what does that mean when we start to look at this? All right. What's going on here? Well, NVIDIA is trading 30 times earnings. Maybe it's trading 30 times next year's earnings. What's Microsoft trading at? Crazy, Microsoft's still around, isn't it? What's Microsoft or Oracle trading at when you go look at their valuations? See, when you start looking at this stuff, what's AVGO trading at on earnings basis? Are these things 70, 80 times earnings? No. Do they need to get there for correction? No. But when you're trading at 25, 30 times earnings and you're out here saying that this is overextended, it's absolute delusion. And do I think that these companies are monopolies? We can all go down that road another time, right? But that's not what we're doing today. What we're saying is, are we overvalued as we were back here? And the answer is not even freaking close. Like, you would literally need these to double from where they are right now on those valuations just to even come close to this valuation. And we could do it in graph form at another time. I'm not going to create the graph right now, but it's super important to get this concept. So what do we have here? Well, we have something that we should just kind of pay attention to it. What do we have? Let's clean it all off and start fresh. Well, we have a situation where we know when free money comes into the market and they ease conditions, XLK outperforms. So when we ease conditions, XLK outperforms. And that has been historically what will happen. When we ease conditions, XLK will outperform. Great financial crisis, we're going to lose all the banks. We rally up and they ease conditions. Tighten conditions, what happens? XLK drops. Ease conditions, what happens? We rally up. Trump 1.0, we're going to go out there, we're going to do all the tariff stuff and do like this was like Liberation Light, and then the market comes back down, and then we're like, okay, we're not going to do that, and then wham, what happens? Outperformance. Why? Ease of conditions. When you're seeing this, this is when I show graphs. When people look at graphs and like, well, why do people keep showing this stupid financial conditions graph? Because that's exactly what you're trading when you're longer term trading and you just don't even know it. So when you go here, and again, this is when Itchy said, oh, by the way, I know we did 1.7 trillion. I know you guys were buying NFTs thinking that JPEGs were actually a value investment. They're not. And we're going to have to suck some money out of the market. And that's exactly what they did. And what outperformed here? Anybody remember? I know it's rhetorical, but what outperformed? Energy. Energy crushed. Everybody had to be in energy. Energies was the cat pajamas. It was the bee's knees. It was the ant's pants. Everybody had to be in energy. We were buying companies like BBT at like $4 and it was going to 30 and we were getting 10%. It was crazy what we were making. Crazy. Why? Inflation, right? Because it just, shocker that you throw 1.7 trillion in the market and things, inflate and all of a sudden people are buying Beanie Babies for $4,000, right? Shocking. But what does this mean for us? What do you have here? Are you going into easing conditions or are you going into conditions that are not easing? I would suggest you're going into conditions easing. Now, we have the tariffs out there and there's some issues with that. And could that make things harder? It could, 100%. And do we have uncertainty? Oh boy, do we have uncertainty. We have a lot of uncertainty. Every day it's either tariff on, tariff off, new tariff. We don't know what the new thing's going to be. I got it. And I do understand that is an issue, but this is the hand that we're dealt. And right now, when you look at this, they're talking about easing, cutting rates. So this delusion that cutting rates out there means that we're going to have a problem, it's delusion. It's no different than when we looked at the Atlanta Fed and it's been plus 4% and minus 4%. And now they're evening it out again. If you remember that little nightmare, everybody's showing that graph. How'd that work out for them? So what you want to say with that and what you want to do with this is really simple. Am I easing conditions or are conditions getting tighter? They are easing conditions. You're nowhere near a breakout scenario yet on this, and that is super important for you to understand. Now, in regards to what you're looking at here, it's XLK in regards to the SPY, and below is Fed funds. And what I tend to do, if I look at something relative, I do like to have something else below it. I just find it very helpful to just kind of use these other tools. And you can use them literally as a indicator to an extent, like what happens when. So as Fed funds, the rate actually ticks up, what they do, we can actually change this. I'm going to start making videos on TradingView for people, but I just want to say something. Like if you see how I changed this, it's to 4.3 now. You just click on this button and you see how you have your percentages and everything right here, and it will change those percentages. You just go to regular, and then if you just hit this button, it just drops it right back down into there. So just a little quick tip on how to change these from regular or if you want percentages. If I'm to look at this, I have to point out the good and the bad and what the changes are. And I'm going to talk about easing of conditions and how tech rallies when they cut rates. Quite the opposite of all the crap you'll see on Twitter, and I don't know another way to say it. If you look in '07, it's like, oh, just buy TAC. Really? Yeah, just buy TAC. Okay. And then what about here? Well, here we just got overheated. And then what did we drop? Well, we had the whole, coming of age thing with tariffs 1.0. Okay, cool. Look what's happening right here. And then look what happens when they stop easing financial conditions. Okay. So this is really what happens there. Yep. What happened over here? And this is really important for people to get because this is where people are looking at this and saying, oh, when they cut rates, the market drops. We went from a period here where CapEx, if you think about capital expenditures here of hyperscalers, here, not only did they slow down, they canceled orders. It actually reversed. So it wasn't like we went like this, just to be clear. We didn't go like, oh, we're killing it to, oh, we're not killing it. It went from, oh, I know we had a 20% order, but we're going to cut our order back by 80%. Like that's how fast it went. It wasn't this where it slows down. It was, oh, we're here and we're rocking, and it went to here. And it's important for people to get this about CapEx. The difference here is everything that was being bought from Cisco by the big dogs, everything in here was done through secondaries and bond issuances and converts. Everything here is being done with cash. Just understand the difference, huge difference. And that's what led to this period of time in that recession, that and some other things. But your financial conditions here are setting up on a Fed fund basis for exactly what we would expect. If this comes down, I would expect a longer term rally because money gets cheaper. Very quickly, I just want to add in front of you is XLK and SPY, and you can see how much money actually came into the market from the Fed's balance sheet, how much they kept on. And you're still way over. I'm going to keep this on a percentage basis just so you can see the difference. Yes, you still have a ton on there. But as this slows, what's happening to XLK? It's outright outperforming. So as the Fed balance sheet slows down on their selling, what's happening here? We're going higher. Why is that? Because of ease of financial conditions. They're going to start dumping less and less on the market because they're making money on what they're holding. It's been my experience, although if you go back historically, they say it's not true, but I believe in it. Because I've seen it 1,000 times, and this only goes back 10 years. But everyone really likes beating up on this woman. I'm not really sure why, but whatever. If you look at ArcW, and it's generational or generation internet. So this is really your speculative, new generation, changing technology. And if you went and took a look at the names that are in here, we're going to see the top 10 because I think it's important. You would see something like Coin, obviously, is number one, 8% weighting. Hood, back in the day. See, that one was more real. 826. And then here, Bitcoin, we own our own fund. I don't blame them. Tesla, etc. RBLX, remember that was supposed to go to zero. Remember that? Remember, Jerry? Remember? Circle, Roku, which I don't get. There's a couple here I don't get. And like this just sickens me that she would own AMD over NVIDIA, but whatevs. So if we take a look at this, we understand what she's buying, right? We understand it's like, it's get in and here we go. We're going to run and gun. Like this makes, Arete look like, I don't know, Berkshire, an example, because this is just, it's on, right? This is all octane all the time. But I missed it, right? That's what we're going to say. Oh, I missed it. Okay. Here's the problem. We look at this stuff on a relative basis, and there's nothing wrong with that from a technical standpoint. But remember, we always look at the world as how. We have the what, and then we have the who, and then we have the when. And yeah, I'm going to draw it over and over again, and people are going to comment that just come up with the graphic. And I know I do have some really cool stool graphics that people really do enjoy looking at those stools. But when I draw it like this and I say it over and over again, you're going to get it. It's going to sink into your brain. So that's why I keep doing it. So what, who, when? Why do you care about this? Because when is the time to buy it? Maybe when it's breaking out. But it was here last time. Okay, here's the problem. That's what people sound like. The stuff that was driving us here is no longer the stuff that's driving you here. So what is driving us has completely changed. Circle, Coinbase, none of those things were driving this up here. Okay. Who's in this is completely different. Their top 10 is completely different now than it is here. The only comparison that you have is the what, is the when. This price, we have an issue here. And so what you could do is you could do a comparative analysis of the price earnings multiple of back here versus back here. You could look at the price earnings multiple of here versus back here. Right? That's one way to do this. The other way to do it is relativism. In other words, where are the high flyers relative to tech? Meaning, here's all octane all the time. And when all octane all the time becomes time bombs and you're coming in every day and this one's down 10 or this one's down 20. Remember when everybody here got Ruku'd? You guys will remember this. Remember Roku was going to change the world? I'll show you this real quick so you get where I'm going with this, right? Ruku's going to change the world, and then we get, the mother of all devil horns patterns, for those that watch those videos when I did some of the candlestick patterns. And then all of a sudden you're just coming in, you're like, oh, well, we closed here and then 447. Oh, we just got, well, it's only $7. I'm fine. It's merely a flesh wound. And then you just start, right? It just starts and you're like, well, I'm down $100 in like 8 days. I get earnings were here, but you see where I'm going with this, right? That is really, have to look at it. By the way, I think Roku was one of the holdings. That's how you have to look at this. You have to look at it on a relative basis. And right now, you're not coming into these names being down $10, $20, gapping down. Could it happen? Maybe it could. Maybe it will. But right now, it's not. You're getting a lot of volatility, but you're not really falling apart. No one would look at these names technically like coin and say, oh man, that's a disaster. God, I can't believe you're in that. It looks awful. Yeah, you went down on a Friday when people had to get out, right? Because of options and things. And it actually was, we actually had a great trade in this during the day. But yeah, nobody really wants a doji at the top of a chart, but eventually you'll probably work it off and go higher. And you see things like Circle, like nobody really wants, a shooting star at the top of a chart like you have right here. But eventually you'll probably come down, smash everyone's hopes and dreams. They'll think it's dead. And then you'll probably bang a U-turn in about a week or something. So, and that's just kind of the market you're in, but you see where I'm going with this. And I don't believe anybody thinks Bitcoin hit a high on Friday. So when you look at this stuff and you understand what's in it, then we can kind of go from there and say, okay, now I got to look at this on a relative basis. And I compare new tech to more of the stodgy tech. So this generational change of technology that I do believe people don't have a freaking clue about stablecoins and how it's going to change things. I don't think people understand the payment systems. They will, but people that get it now are going to be way, way ahead of this. It's one of the things that we've been doing in the community. It's working out very well because we're, in my opinion, very far ahead of people in this stuff. And so we were able to get in this stuff relatively much earlier. If you look at like Arete, but wait, there's more. Watch this. This is ARKW in comparison to XLK. So in other words, ARKW is back here. And again, really simple to do. All we have to do with it is just do this and go ARKW. Click on it, click on this button, and I'm just going to work some of these in and then move it to the pane below. And what we can see on this is, oh yeah, no, you're back to this level. Clearly you're back to these highs, but on a relative basis, where does that put you? You're not even close. Like you're not even close to the levels. Let's go back and change this out, make this regular. You're not even remotely close to where you were back here on a relative basis. Not even close. So are there areas in here where, oh, maybe we're going to stop? Maybe not. Maybe before people say that this has had its legs and it's done, they need to look at some of these relative graphs. Because if you start looking at this from a generational standpoint and saying, and I do believe this because I've seen it through 3 cycles, possibly 4 cycles if we include what happened with the pandemic ending, or when, Itchy stopped putting all the funny money in the market, stopped buying houses so people could actually go out there and buy their own house. But if we take a look at this, what are we saying? We have a lot of room to go, like a ton. If you're saying to me that, oh no, the relativism and where we're at is definitely something that's of interest and I want to pay attention to it. Yeah, you have a lot of room to go. I don't see this as something that's ending. I personally see this as something that's just starting. You're just starting to see the sweep of this area. It's just beginning. And does that mean that ARKW's like the cat's pajamas, you have to get in right now? No, but what it means is that generational tech versus the tech that's been around for a long period of time, you haven't even begun to rally. And when you look at it from this perspective, it tells you that you have legs here. Longer term, you have legs. And I do believe that. And understand when we're looking at these charts, I'm not looking at how you should be trading on Monday or Tuesday. I'm telling you going out longer term that these themes, you haven't even seen the beginning of these themes yet. Like you really haven't. And it doesn't mean that the Metas and the Googles and all those are going to run, but it does mean that the newer technology names that we're looking at, the coins of the world or the circles of the world, or whatever the new names are that come out, those names are going to go a lot further, a lot faster than people think they are. And that's becoming very clear. Whether that is some of the sectors we may get into today, where we're looking at uranium or some of these other sectors, it doesn't matter. But what does matter is just understand that you're nowhere near where you were during the pandemic, despite when people are looking at ARKW. And this is an important concept. And this ties us right back into inflation. Now, in front of you is XLE divided by the SPY. And this just tells you very clearly, do we have a situation where we have to worry about inflation? And if we take a look here from 22 on, which was really peak inflation, and I'll show you a really easy way to use this chart. But you upticked in here, right? Because we had inflation that was rallying, and now we have it that was declining. And you can even see it in here when you come back and you see these rallies. Well, why? Because inflation had some level of uptick, and you can see the little movements based upon that. So do we have inflation here, and is that what's going to derail us? And if I go here and take CPI and overlay this here and just let's drop it on a different pane down, and we'll put this one below us. And we just look at this on a weekly basis. We're just going to go back to it. Well, yeah, you did uptick in here, and then it stayed higher for a period of time until it peaked. And again, if you just take a look at these peaks, obviously I don't really want to zoom in on it, but if you look at the peaks here, oh, look, we peaked, and then we came back down, and as CPI came down, what happened? Oh, they sold energy names. Okay. And then it just, as you go through it, it gets really, to me, really very simple that you should be able to kind of get a sense of this and see that this is what's happening. Let me clean this over real quick. And so again, here's peak inflation back here. And then you kind of get it right where you peaked out, and then that's it. And you can just watch this over and over again. Oh, look, inflation's rising. What does that do? It leads to energy outperforming. Okay. CPI peaked. What does that do for us? Okay, it's time to sell energy. So when they sell energy names, CPI is peaking. Now, you're getting this little uptick here. Is this something you have to concern yourself with? If you see that, then maybe you'd want to look at buying energy names. But right now, energy is telling you that CPI is going nowhere. Even these little blips, it's telling you you're going nowhere. So obviously, this is why CPI is important. But right now, inflation is not the thing that's going to derail you. When we sit and take a look at XLP divided by XLK, which is consumer staples divided by TAC. If we kind of look at how this played out in December, XLP completely outperformed TAC. And then we had this period in 25 from January on where XLP outperformed, and which is kind of interesting. That's the Walmarts and Costco's of the world, the Procter & Gamble's, the Colgates. And then you just get to that April 23rd period, and since then it's just been complete, utter outperformance to the point where XLP names relative are going to start getting super cheap. Maybe there's some names there to look at eventually. But when you look at this overall, yep, you have this pattern. What I find interesting about this more than anything is that if you look at this, you're actually lower than where you were in January. So when we look at this, they're actually leaning more than from January that they don't need to be in the consumer staples. So when you sit there and think about people and are they hedging, what are they doing? No, they're not. They're not hedging. They're not buying consumer staples. Now, people can make a contrary argument and say, well, I want to be on the side when this is going to happen. Okay, let me know how that goes. Because you just don't know when it's going to happen. So you just have to keep monitoring it and making sure that it's not there. Watch this on a weekly basis, just to put this in perspective to how crazy this is. Look at where you are, relative speaking. And again, you'd have to look at what the names are versus what they are here. When we talk about XLK back here, it would have been Cisco at 80, right? At 80 times earnings versus where you are now with what do you have in XLK that's leading? Apple. What's Apple trading at earnings? 18? 15, right? If you go out a year, like maybe we could say it's 20. So what does this mean? Depends on, how you want to look at it. But what does this mean? It means that XLP relative to XLK, even though it's at lows, can go a lot lower on a relative basis. See, a lot of people look at IWM and say IWM needs to participate. And I would actually argue that it is. And people would say, well, how can you say that when you look at this? Because I don't think they're looking at IWM the right way. I think they're looking at all these thousands of names in there that just don't make money, probably shouldn't even be public companies that are in the IWM. They really need to clean house. If you took the top end of IWM and you looked at the top end of those names, you get a different picture. If you took the top 200 or top 10% growth names that are in, this is IWY, and if you take the top 10% of the Russell, you're at all-time highs. And I think people need to understand that this is much broader of a rally than what people think it is. The top 200 are at all-time highs. And that really brings us back for full circle on how we started this, doesn't it? Here's the top 200 names in IWY relative to the SPY. Does this look familiar? It should, because it's how we started. And what you're going to see is the IWY up here divided by SPY, and you're going to say, why am I looking at the same chart? And you're not. You're actually looking at it, you can see it right here, XLK divided by the SPY. So why am I showing it this way? Because what you actually have is a much broader rally through smaller caps than people think that they have. They're just looking at IWM the wrong way. They're just looking at smaller caps the wrong way. They're just looking at this generational move like we saw in the ARK-W the wrong way. They're not looking at it on a relative basis on where these things could go to, and they're not doing comparative analysis. And that's it, guys. The devil's in the details. I mean, it's really that simple. The devil is always in the details. Let's get to some names. So what does this act, the Genius Act, or this other act coming out, the Clarity Act, do for some of these names? Well, I personally think it's going to change the landscape drastically. And I'm just going to mark off some of these areas in here. Really, I should probably put the magnet on for this because this might be easier. But these levels that you're saying, this 33, and I don't know why it's giving me that 33, considering that the high is right there at 29. And the point of this is, at the end of it, when you look at these levels and how you're acting, you can see hits, rejects, goes, right? And now you're back at this high, and now you have the mother, really, of all cups and handles. And people will say it's not, whatever. You're flipping, and people are going, I can't believe that people are buying, and they're paying this, and they're buying it up here. If you really understood how they can change everything, what stablecoins are actually going to do, that even companies like Walmart and Amazon, which are 50% of online retailing, which I had no idea that they were, I didn't know it was that great. I really didn't. Which is just fascinating. Anyway, they want their own money. They want stable coins. They want to get away from Visa and MasterCard. That's why Visa and MasterCard are panicking. So I don't think people get this. What you will have in environments like this, especially on breakouts, is you're going to have opportunity to trade. Now, I came in on Thursday and I got asked to do this. So I'm going to do a video on trades that just did not work. Because people say, hey, how do you know? You always shoot videos of trades when they work. And my response to that is, yeah, because you want to see what works, not what doesn't work, so that you could try to implement that into your own system, right? But people always say, well, show us where you get stopped out. So I'm going to put a video together like that. So you can say oh, this didn't work, blah, blah, blah. This kind of stuff, when it starts to go, came in Thursday, and I had some puts because I'm like, you know what? What's going to happen here? Everybody knows this thing passed. You might have one of those days where you sell down on Friday. And I was right to an extent, but right later. The larger issue, and it's funny, I had the 400s and I actually wound up breaking even on them. But what's fascinating to me on these kinds of breakouts is that people will say, oh, well, that's it. It's over. I don't think this is over. Far from it. I'm not saying you can't come back down 100 points and drop and make a U-turn. But to think that this is over, I think is pretty delusional. And it means that you're not really understanding the space of what's going on there. And I would start watching some of the China names that I've been pointing out for some time in this room as well, or in this community for some time, even publicly in YouTube. And if you're in the community, you certainly know the names, and I'm going to go through those. But if you're thinking short term and you're like, I don't want to buy this thing because I think that I'm too late, you do short-term trading with it and you watch key levels. So something like coin, once you broke out, you knew that was it. And you can see this in here. So what we did was we just knew okay, well, those puts are wallpaper. They're not going to work. But I don't close them on Fridays. I leave them on. I'll show you why in a second. But what tends to happen here is you're hitting these levels, hits, rejects, goes. That's it. That's your whole trade in this area. And there's more to it with the volume and everything coming into it. But people will say, well, I don't want to do that trade. Well, that trade had blue skies above it and had about 12 points. And if you're day trading these things or trying to get in them for short periods of time, it makes a lot of sense to look at these things when they're at these all-time highs and they flip it and retest, or when they push through with the kind of veracity that something like this pushes through with. And you can kind of see how I have it marked off. Whenever you have higher high volume, every time that you have higher high volume like this in the middle of the morning, the first 15 minutes, and you break out like that, you want to pay attention. You definitely want to pay attention to those bars, especially when they're 2 times the ATR of the average move. But when you have volume like that, and this was your other volume area and you couldn't get through, and then you have more volume behind it, when you skew like this on volume, I'll draw you a little line. When you skew like this on volume in the day, you always want to pay attention to those trades because it means there's more. It doesn't mean that it might not end in tears like this did if people didn't get out of it, but it always means that there is more. Here, take a look at this live. 432 is the all-time high. You might just flip it today and go. They're going to do it. They're going to push it through. See that? They're telling you right now they're going to push it through. 1 minute bar is $5. What could go wrong? How much volume? You're going to push through that and hit all-time highs. I bought it. I think you're going to do it. Now, if you don't, all I got to do is just kick it out right there and it's over. You should have gone already and you're not. Trimmed, only up like a buck. Up 2, trimmed. Now I can just hold it to here. And if it breaks, I won't lose anything. Just use that low. Up 4, trimmed. You got to use that low as your stop on the rest. A lot of volume. Trimmed, up 7, up $10 now in coin. Nothing for me to do with the rest of it now. I've trimmed enough. I might just be able to hold it all at 31.45. It looks like what the total cost is. There it is. There's your first sell signal on it. I just put the rest at break even, just leave it alone. Somebody asked about trimming. I'm down to about 25% on those positions. So I get asked a lot about these kinds of trades. For me, I use and people look at it and say, oh, it's an EMA cloud. It's not. The cloud that I use on something like this, let me pull it up. It's something they use, and I give it to the room, but it's tied obviously to price, but it's also tied to the volatility, not only of the index and the VIX, but it's also tied to the volatility of a stock. So it tends to move and get wider and thinner. So it's to me, it's a lot different and moves a lot different than any kind of EMA cloud, because EMA clouds in general don't move predicated upon volatility. They don't rise in size or decrease in size. So just FYI. But the point that I was getting at is here, you flip colors. I don't care what colors you make it. And if you wanted to get out, get out. And it never really did that in here. And that's why I think something like this is much better than having a moving average that people like, oh, just watch the 9. Yeah, how many false signals are you going to get on a 9? And then if it does break, it's pretty nasty. This just tells you a lot more. But anyway, the point that you're getting at here is if you wanted it, you took it. I moved the rest to break even. You should do what you're comfortable with. I don't really feel like trying to get in and out of these things if I think they could move. But the other thing that this does is that when you move like this, so I came in, I had a bunch of like 400s puts, and I do this a lot, and I should really do a video on it. But I came in with a bunch of 400 puts, and they were basically wallpaper. I paid 180, 190. By the time I came in, they were up here, they're 10 cents. On Fridays, I just usually double them, at least double them, because, okay, so you're going to cut my cost in half for, 5% of the investment. So if I can cut my cost in half for 5% of the investment, it's silly not to do it. So just think about it this way. If you paid $2,000 for an option here, and now you can buy that option for $100, it's kind of crazy when you think about what that's going to lower your cost. And people say, well, you shouldn't add to losers. Yeah, options, you might want to reconsider that thought process. For those that don't know, that are just watching, I used to be a registered options principal. I was one for about 9 years. Obviously, you guys know, if you've been watching, I've been trading over 2.5 decades, Jesus, at this point. Anyway, the thing about it is, you, especially on Fridays, you might get some volatility. And we were actually able, it was kind of crazy. I was actually able to get out of all of those up at 90 cents or like $1 on some of them when this started to happen. And you can see your changing trend right here. And then, of course, with this kind of stuff, I always just like showing people the RSI, because they'll tell me that RSI doesn't work. And I can just always send them a screenshot and they can explain to me what happened. I do think that this kind of stuff is going to push this week still. I don't think it's over. I think you can have pullbacks, and dojis are signs of uncertainty, especially long-legged ones, but you're coming into an area here where, yeah, I get it. And yeah, I think some of this stuff's going to be wicked, like really rally and really, really wicked. And it's going to be very hard to trade. But you don't want to sleep on this stuff, guys. I don't think I could be any clearer about it. You want to pay attention to it. One of the things that we've been doing is just trying to get ahead of where it's going. And if you've been watching these videos, you know that we've been looking at some of the China names that are setting up for stable coins. And this was one that we've been in for a little bit of time. And we were watching the area in here. We actually got involved in it here. And we've been, I guess it's been about 2 weeks now. We've been yammering on about this one in these videos. And you can see how this is going. I think they're the ones that are going to get the contract. I don't think it's Tiger. I started thinking it was Tiger, but I think it's Futu that's going to get the license from what I'm reading, the research that I do on the weekends. I do a ton of like fundamental research on the weekends. But I think that they're the ones that are going to get the contract. And I think that's why it's moving the way that it is. Also, I think Coinbase is going to be invited into their stablecoin situation. And I really think you're in an arms race here. And again, if you're in the community, you've heard me mention this like 1,000 times. If you're trying to get into the community, just make sure that you are on the wait list, because another batch will be going out shortly, and then it's going to be shut down for about 30 days. No one's going to be able to get in. I'm going to close enrollment. I do that because I give everybody the opportunity to talk to me when they join through an onboarding call. And I can't talk to, obviously, everybody. That's why. Anyway, if you look at these names, I wouldn't sleep on this stuff, guys. I do think that stablecoin movement is going to continue. I will also say that the next thing that people are thinking that they missed, and I don't know how they think that they missed this, but stuff like nukes, you've just been straight up. I mean, if you really look at what's happened since April with these kinds of names, they've just been absolutely just exploding to the upside. There's very little to say or to do with this kind of trade, is there? There just really isn't anything for us to, kind of say or do with something like this. And I think that's super important for us to, to get, and super important for us to understand. I don't think, from my experience, that this is something that you're going to want to call a top line. I don't think it is. You have an energy source. I do think that I don't fully get it. And I'm still working on it. I've got people in the room that get this stuff a lot more. Just like I've got people in the rooms, in the communities. And this is why I love a community base so much, man. Like, I've got guys that were in this thing at $4, and I didn't understand it. I'm out there bashing it. I don't buy $4 stocks. I was using my man voice too. I don't buy $4 stocks. I'm cool, right? Okay, 57. How'd that work out for me? I'm in it at 30, but 4's better. So when you have people that understand this stuff, no matter what it is, we have guys in the room that were doing this stuff like insanely cheap. I'm going to just say this. Yeah, you're always going to have people that know more than you. And that's kind of one of the reasons why I like having a community that cultivates like the right kind of people that actually are smart, and not the hoople heads that are like, what are we buying today? But people that actually are experts in fields. It's I hate saying it's like a cheat code, because it's not. It just means that you're tapping into their knowledge that you're never going to have. I don't know why I'm going off on this tangent, but I am. Because I just really appreciate the community, I guess. So it's been extremely rewarding. Anyway, if you look at something like a URA, I think you're just getting started on these names. And so that you have URA, you have NLR, and I'll give you one that I can't believe is actually turning, because there's no freaking revenue with it. But who am I to argue? I did buy this one this week. This was a pretty classic break out. You could see the move right out of that. And then you did it on vol. So very little to say about it. I mean, I used my vol scan. There's the break. It's not rocket science sometimes, guys. Sometimes, simple is easy. If you can't explain it in 30 seconds, you don't understand it, right? So when you look at stuff like that, like, does that look like it's over? And so you start diving into this. Take a look at this name. Look at this. Look at it. See what I'm getting at? Like, I'm forming freaking cup and handles on companies that have zero earnings. And yeah, I get it. They're going to do this and they're going to invent air, and I get it. Whatever. I don't care, right? It boils down to the what, who, when. What's moving? Macro. Why are these names moving? They're moving because this current administration is saying we need nuclear power. So much that they're changing the name of nuclear facilities to clean energy facilities. Like, if you don't see that the lobbyists are behind this, I can't help you. They did it in Chicago. CEG did it with 3 Mile Island. It's now the Kramer, remember this move in here? It's the Kramer Clean Energy Facility. And this boils down to understanding what names are actually moving. Because if you look at something like a VST, it's completely outperforming something like a CEG, which has been all over the place. And even these names like NRG that were running up, that's not the stuff that really seems to be following along, is it? It really seems to be the more on the front, the cutting edge, the frontier kind of stuff seems to be it. But that's not true. It's also the cash cows. Like, look at this LEU. And we had a pullback here where someone downgraded it, but watch this. And, I use a 12, a 22, and a 55. You should use what you're comfortable with. I would just say that using this 22 and watching how it's riding the lightning here, and then you watch the pop, it makes your life pretty easy. And you can see, I actually picked some of this up at like 212 the other day on a reversal. I think somebody hated it for some reason. And now you're at 250. This one, like these kinds of names, there's real earnings here. Like, there's real money and real earnings that are coming into these companies, and they have agreements with the DoD. I don't see that changing. I also don't see this kind of stuff changing with satellites and with drones, specifically drones. If you spent time researching this, hold on one second. Let me find this. I showed the guys in the community this about a week and a half ago. Hold on. Now, in front of us are just clips from papers that you guys are not going to really care about. Things like Defense Scoop and places like that. Again, I do a ton of reading, but this came out about a week and a half ago. So it's always the what, who, when. Like, what is the macro change, right? Defense Secretary Pete, with drones seen for what they are: disposable munitions, not prized aircraft. This shift spells out a sweeping new Pentagon memo, could reshape how the United States fights, builds, and trains war for decades. There were two things that happened here in the past week and a half that are going to drive drones, hands down. But number one, drones, you need to think of it now as a grenade, not an aircraft. And I'm not going to bore you with the entire article, but order tears up the old playbook, slowed drones development with paperwork, endless sign-offs, yada, yada, yada. Message is blunt. Enemy is turning out millions of cheap drones every year. Russia alone aims for 4 million drones this year. Ukraine even more. Meanwhile, the U.S. have forced to make with decades-old procurement of F-35s, not quadcopters. So the Pentagon is flipping the table. Under the new rules, small drones, group 1 and 2, speak or reclassify as consumable. Oh, think hand grenades, not stealth bombers. Commander 06 level, colonels, captains, equivalents now have the green light to buy, test, modify, waiting for approval at the top. This is the first thing that happened with drones. And I don't think people are fully understanding what this means. It also means that people that were building other legacy kinds of things, they're not going to build them out the same way. So the game is going to change, and the game's going to be drones. For example, this is something that people aren't getting at all, and this is different than what the secretary has said, the defense secretary. Recently issued an executive order. So there was an executive order that came out about a week and a half ago, unleashing the American drone dominance. Sharp focus on civilian use of unmanned aircraft. The new policy also includes multiple provisions that could have implications for Pentagon and military. Sharp focus on civilian use of unmanned aircraft. Must be able to procure, integrate, and train using low, high-performing drones manufactured in the U.S., says Donald Trump. President Trump. Tucked in the new EO executive order is a line that directs the department and military leadership to identify programs that hold potential more cost-effective or lethal if replaced by drones. Submit a report within 90 days of publication. So what they're doing is find areas where this would be better than that. He pointed to the Army terminating its Apache attack helicopter replacement program, noting that the termination was likely driven by a desire to use drones. Despite the title being Delivered Drones in Warfare, Section 9 of the order spotlights elements that she considered. This is one of the people that was speaking the article. The research piece is like 12 pages long, so you're just going to have to bear with me. It's less about breaking down challenges in the department faces acquiring, sustaining, and scaling. Notes the executive order entirely overlooks, and this is the part where I don't think people are getting it. And this might be why PLTR continues to move the way it does. And I think she's 100% right on this. Unmanned surface vehicles, unmanned underwater vehicles, not just drones. When we think of a drone, we're thinking in the air. What about air, land, sea, and other autonomous and remotely crewed systems? Meanwhile, a welcome provision is the push that allows all platforms on the Blue UAS to operate on military installations without requiring policy exceptions. So something like that provides us like this opportunity to get involved. So we had a little 3-bar pattern here, bought the pop, and we were already cutting a piece of it up here when we were up like $10 in a couple days. But this is not going to go away. It just isn't. And you're going to see obviously these rallies and pullbacks. This was earnings when they crushed. What do you think earnings are going to look like 3 months from now, 6 months from now, a year from now? Even these little guys like DPRO. But this thing came out at $5.35. They just did a secondary, exploded to the upside because they just got a DoD contract. I mean, okay, great. So like it had a pullback on a day, but where do things like this go when they start getting these contracts and people are using this stuff and saying, oh, just use it as a grenade? Like that's very different than use it as an Apache helicopter. Like your mindset on your procurement changes. And I do think that when you start looking at these operating systems and you think about how PLTR fits into this, it's that line that we just read. Right? It's not just the air, it's the land and the sea that I think is really interesting. And that could be one of the reasons why this thing's just been such a beast lately. That's it.